Good afternoon, Quasar Markets Live. Jim Iorio. This is a wacky, wild, crazy ride day. Dow is up over 700 points. Now it's down about 200. Let's unscrew people's heads all back on, man. What's going on, Jim, in this market?
Well, unfortunately, I think I'm going to add to people's heads popping off here because I wrote in the Unfiltered newsletter, Unfiltered Investor newsletter last Sunday, is that when Bitcoin 2 weeks ago, when Bitcoin fell off a cliff and the NASDAQ followed it lower, and it was definitely conclusive that Bitcoin led the move, which is highly unusual. Usually the NASDAQ leads the move and Bitcoin follows. NASDAQ's 32 trillion. The crypto market in total went from 4.2 trillion. Now it's about 3 trillion, but whatever. So that to me signaled that people were worried and that perhaps the AI trade was stretched. Now, to put that part in perspective, is that we were at the highs in the NASDAQ, 16% over the 200-day moving average. That's a long way. The last time that happened was in July of 2024. That last time that happened was in July of 2024, and all of a sudden then we had a big move back down to, you guessed it, the 200-day moving average. So now we're in a situation that we're stretched, and I was waiting for yesterday, the NVIDIA earnings, to see what the appetite really was. Now, I wrote in the newsletter that if they post good earnings and then ultimately get smacked, to me, it'll be another indication that whatever level of bubble, and I don't think this is an enormous bubble, but whatever level of bubble, and I think it's small, is beginning to deflate. I'm not really worried, but 16% seems reasonable to me.
Okay, so a few weeks ago when I was screaming the bubble was here, hey, get out, people kind of looked at both of you and me and laughed at us and said, no, we're going higher, higher, higher. Now it's like, hey, the bubble burst. Why are they not getting back in? Are they scared the other way now, right?
So I did actually, because as I've told and I've said in the Unfiltered Investor newsletter, I had hedges on at about 3 times the normal rate I do for my thing. So I took about a fifth of those off just now. You know, I don't think these are the lows yet. The only thing I'll point to is that in the S&P, we just hit the 21-week moving average. So, you know, in Unfiltered Investor, we love the 21 and the 8-week day, whatever moving average. Those are our favorite.
Can you explain why?
Just because they work and they test out better. I love that question, by the way. Yeah, there is no reason other than back testing for decades proves that they have more of an important role than others do. So we just hit the 21-week moving average in the S&P. So I bought some back, some of my hedges back, or actually I sold out of some of the puts, but you know what I mean. Yeah.
And so I just bought Tesla stock here. Am I wrong here?
No, I don't. I don't think you're ultimately going to be wrong. I think the bargains are beginning. Like I said, I'm concerned if we break through that 21-week moving average, the 200-week is quite a bit lower, but the 200-day moving average, 16% lower. I'd be happy with about a 10 to 12% correction in the NASDAQ. That's what I think we're due for. And again, when I even was over the last couple of weeks saying bubble, 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 I think I was pretty clear in saying that it's definitely it's not some massive bubble that a pinprick is going to bring us down 40%. I don't believe that. I don't believe there's the leveraged positions that there have been in the past.
Yeah, and I called it on Schwab. I said 12% when Nicole asked me. I think 12% is the number, and here we are. But I have to ask, Jim, you know, you and I have been doing this for so long. Who the hell is selling?
Well, I think the AI bubble in the last year, I call it a bubble casually, and I don't mean to, I'm sorry. But I think it started to attract weaker hands and people just thinking that there was no risk in this trade. AI is the answer. And by the way, I'll add something too. When the internet bubble burst, those stocks that were the most bid up lost about 80% of their value. Some of them were even gone, but what was left was the actual technology. We still had the internet, and we're still going to have AI. AI is a very, very important and very disruptive technology. One thing I will add too is that when AI was first started, it was like, who makes the chips? Who builds the infrastructure? Now you're going to have to start thinking about who uses AI to make their company more productive and more efficient. And it might not be technology companies. It might be the Walmarts or the Deeres or agriculture companies that are going to be able to be the big second-tier beneficiaries of AI.
I agree. I've said this all the time. Is the AI companies, the pickaxe, the shovels, and the ones with the data, the Amazons, the Walmarts, the Salesforce, they already have our data, right? Meta is a good example of that. They already know all about us. So it's just a matter of them applying that AI to them and taking advantage of us.
Yep.
All right, Jim. Well, I have to ask, are you a buyer here or are you just going to wait it out? You got more hedges on? What's going on here?
So, like I said, I took off about 20% of my hedges. So I am morphing into a buyer. I'm not a both hands buyer. I'm like, I'll take one, I'll take two. Yes, exactly. But I'm short 50. So I'll take them back a little at a time. On any big sort of panic down moves, I'll buy a little back.
Yeah, and for those of you who don't know what Jim and I were just doing, there was the hands on the floor, which we both probably miss a lot. All right, Jim, I'm going to ask you one last question. I'll get you going. I know you got a lot going on, including a basketball thing. All right. So is this the panic time between Thanksgiving and the holidays? Will we have a good holidays, or will it be? I mean, I'm already seeing Amazon with massive sales. I'm already going crazy buying clothes and name brand clothes. I don't buy unnamed brand. I buy name brand stuff. It looks like the sales are good, big. Could be a good Christmas or a bad Christmas.
So this is the paradoxical part, because I think the economy is doing okay, with the one exception is I do think there has been a sizable wealth effect from the rally of assets over the last 2 years. And I think the top 30% of the asset holders were spending money like drunken sailors. I think they'll continue to do that. I don't think a 10 to 15% break in the NASDAQ is going to derail that. So I think from an economic standpoint, I think everything seems to be fine. I thought it was going to be late Q1 or Q2, where really the different sort of administration policies would start to filter in a positive way. But hopefully we're seeing that come a little bit early. We saw some okay numbers today. Granted, they're the BLS numbers, which historically are not very accurate.
Yep, and I am going to do it right now, everybody. Please, 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 please. Click on the button I just put up there for Jim. You can click on it right now. Get that unfiltered investor beehive. Because listen, I've known Jim a long time, Mr. Chicago himself, and when you've been in the game this long, you know the game. And when we're confused, everybody's confused, but we're not confused. We know what to do. We know how to put those hedges on. Read the unfiltered investor. Get it right now. Click on the button, log in, and we'll see you later. We'll see you next week, Jim.
Yep, definitely. Thank you very much, Stephen.
Later.
Yeah. See you, brother.